jail's not that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
What's up, guys? Welcome to the first episode of More Than Speculation, a new podcast by myself and my good friend here, Lambroz. We hope that this podcast can be different than all of the other podcasts. It can be more fun, candid, and also informative for the listeners. Our goal is to really not to become just another podcast to talk about U.S. politics for 30 minutes or just like sharing the same talking points again and again with all of the news items. So yeah, that's the context behind it, and we hope that you guys enjoy this.
All right, man. Nice meeting you guys. So a little bit brief intro about myself. I'm a professional shitposter on Twitter, survival of multiple emotional and financial damage in crypto. I'm a firm believer of trying everything out. I love to dive into protocol mechanics, understanding the dynamics between users and token holders and their behaviors, and in hopes to make some money and have some fun and leave a name in crypto.
And your other co-hosts, my name is Marco. I'm an investor at Primitive Ventures. We are an investment firm that's not a VC but writes VC check. I've been in the space since late 2016, and also similarly got destroyed by multiple cycles, just like most folks out there. You know, like, hey, the smart money is also struggling, quote unquote. Before this, I was a research director for a crypto data firm, so I'm very good at talking to boomers about ETFs and all of that. We can get started. And for today's topic, we actually want to start our podcast with something that's a little bit near and dear to our hearts and been one of the biggest topic perhaps that's been talked about in the past couple quarters, and that's VC coin. I'm gonna pass it on to you, bro, to maybe like give the lay of the land or what you think about VC coins and stuff like that.
Okay. So a little bit of intro is that Binance recently issued a report on how all these low float, high FD coins are very underperforming and wrecking the market. No one seems to be buying them. A few big CTs and big characters in crypto just started commenting on the view. I'm highlighting two guys, which both of them are whom I respect the most.
Mm-hmm.
Kobe say most new token upsides are basically captured by private markets before the token will launch or before the token are fully vested. He thinks there's a dislocation between like public and private market. Essentially, no one wants to buy public anymore because they kept getting wrecked and all the private made money. But because no one's buying the public, even though if you're buying the private route, you end up losing money. Whereas Hashi, please don't judge my Chineseness. If I say the name not properly, I'll repeat the stuff. But basically, he's saying, basically, he's saying that like VC been dumping on retails a lot, and retail's basically been tired to be dumped on, and that's why most people are more favoring fair launch, such as meme coins, etc. And he thinks that this is basically essentially market mispricing in terms of valuation, etc. And it should be corrected over time. A lot more people to talk about solutions. Personally, I don't agree with them fully, but I'll expand on it a little bit more. But like, I wanted to hear your thoughts on this. Like, let's say, first, maybe your thoughts on this meta, or maybe just as a VC, how are you playing this or investing in this market or in this kind of trend?
Yeah, so it has definitely been a different environment than prior cycles. And this topic deserves its own presentation for like an hour perhaps. But one thing that we have observed that is, and I think even other actors in the space have also observed, is that the offshore centralized exchange dynamics are not the same compared to prior cycles, right? And this is pretty much obvious given all of the recent actions that, you know, like CZ is going to be out next month, like yay. But it's pretty clear that the centralized exchanges themselves are starting to become a lot more strict, right? And that's either because of like pressure or just like market dynamics, and they don't want to give the impressions that like retail traders that trade on their platforms are going to keep on consistently getting wrecked, because that's not a good formula for a returning customer, right? And on top of that, I think what we have seen different is just that really the fragmentation of liquidity and trading venues. So let me expand what I mean by that a bit more. Um, perps volume, CME is actually higher than Binance, and that wasn't the case in the last cycle, right? So for us, it's very clear that there is a clear discrepancies between how majors are being traded and how alts are being traded. But this time around, it feels weird, man. I might need to ask you, but like it feels like normies much rather buy like Nvidia call options than like altcoins, right? So like I think that's also like very that's one of the reason why we have not seen these alts performing.
Before I'll let you expand on it. I would like you to explain a little bit why the volume of CMV is matters to a lot of our listeners. Like, why does this
Right.
metric
So
matters?
yeah. So like I think it's not that it matters for altcoins per se. Like I'm not saying that the CME volume being higher means that alts being lower. It's just that to me it's clear that Bitcoin and ETH to the extent of it is now like a global asset class that many of the crossover funds with, like multiple portfolio managers trading all of asset classes, they are also trading Bitcoin and ETH. And I think we have also seen that Millennium and a couple others hold a lot of Bitcoin ETF positions, and most like market participants have argued that it's mostly for like cash and carry trade. Like they're not just like longing spot Bitcoin on like 10x leverage. Like that's not how these people work. So yeah, it just creates sort of like this, like it's almost like two different markets, because like it used to be just like, hey, if Bitcoin goes up, ETH goes up, alt goes up, and there's like a very clear like rotation, right? I'm sure like most of you listeners have seen that one chart that's like from Bitcoin goes to ETH goes to alt, and that's sort of like the altcoin cycle. But now I think that is kind of broken just because of the way that majors are being traded. And like the money traded on CME is not going to move on chain, right? So yeah.
If correct me if I understand this correctly. Essentially, you're saying that with the CME volume higher than the alts, essentially, the alt exchanges, you're saying that there are a lot more institution traders coming in, pushing up the price. That's why that is potentially like Bitcoin and ETH going into their highs, but actually there's not much money in the alts, and that's why, because these are sophisticated traders, they might not be going into alts as much, breaking the talk that we like to go and say if Bitcoin and ETH pump, alt will pump as well.
Let me be clear there. Not that because they are sophisticated traders they don't touch alts. It's more about when people in crypto talked about institutions, quote unquote, that term is being used very loosely in like crypto. Like, dude, like two guys with 5 million fund out of like some random island is just like, yeah, we're like the institutional money. But like we're actually talking about like people who like these banks that are like selling ETFs to like the grandmas and the boomers, stuff like that, and also like all of the pot shops and stuff like that, and the trading firms. Those guys, they it's typically two reasons, right? Like they either are too big for the alts, or they have a mandate that they just can't like randomly touch like altcoins. But Bitcoin and ETH are mature enough for them to like trade on, and they can at least see like the the opportunity there. They have better access to like credits, like they can lever up on like the cash and carry trade and stuff like that. So because of that, that's why like Bitcoin and ETH have been performing very well so far compared to like the alts, right? Because the alts, it seems like it's just us. It's just like the 10,000 users who stayed. And that's why earlier I said that I don't feel like my normie friends who used to degen back in 2021, like they're not back. Like they're like buying Nvidia options instead. So like I think that's one of the reasons why we are seeing these like VC coins dumping and all that.
Understood. So, wait, I feel like you took me on a round trip, but like essentially you're saying that the way of investing is going into BTC and ETH. That's your strategy, on personal level or as a fund level.
Oh no, like I guess like I was just saying that just the overall market dynamics. That's how things are going to like for a fund and personal. I think it's a case by case basis.
I see. Okay, so what do you think about this meta? Let's say even if you're not doing it, like what do you think are potentially the right way to play this meta?
Damn, that's tough. I think there will always be alpha in being early to private markets. That has always been the case even for Web2, right? Even for like equities. Um, like when you say how to play this meta, are you talking about as retail or as a fund, or maybe we can?
Uh, okay. How about this? Let me rephrase this. I think this is very hard to say because I think we're in a meta shift, so it doesn't really matter. Let's say
Mhm.
you're advising a promise project that you invested, or you're just friends with them. What is the and you haven't raised yet, and you're about to go into the race,
Right.
and you're good already. What is the right strategy to avoid or embrace this? Like how to handle this? Let's say I'm a
Uh,
founder, right? How would you advise to
yep.
do it?
Definitely not over race one. So sort of like understand the market reality and understand that one of the superpowers in crypto is that you make your communities and your token holders money, right? Like that's why I guess like just to name a few, like Pendle and a couple like others have such a strong following because they they allowed the market, whether that's private investors, VCs, or retails, to capture the upside. Whereas what we have seen is that if you launch at too high of a valuation, you're not letting anybody capture that upside, and your private investors are rushing through the door, right? The second advice that I would give is that when you are sort of like discussing listings with exchanges or anything like that, try to really understand where they're coming from and what positions they are in. So these can be something as simple as can you actually contribute new KYC users for the platforms, right? And let's say if you're having a hard time getting listed on the top tier centralized exchanges, how can you best manage your liquidity on chain? Like I think a lot of the time people underestimate managing like market operations, whereas in fact in like traditional finance that requires like almost like a whole team, right? So like
Hmm.
if you only launch but you don't really pay attention to like, okay, how large is my pool, like what's the I guess like what's the TVL of my assets on Uniswap compared to like the like market cap, right? If it's too like imbalanced, then it's going to trade like a shit coin and stuff like that. So yeah.
All right, all right. Whoa. Okay. Do you agree with Hashin's points of will the market be correct? Like, how would the market correct? And if you agree with him or disagree with him, how do you think it will play out actually?
You mean as in like, okay, yeah, the market will correct over time. I think I do agree because there is not much else that can be done anyway. I think we have already seen this with like I guess without naming names, some launches have been
Please do.
under have been underperforming, right? And even Binance, if I'm not mistaken, released a blog post a few months back, right? Like saying that we want to foster like a healthier like FDV environment and stuff like that. So I think the market is already doing its work. It's gonna start to like re-rate all of these projects, and also I'm sure you have also seen that some liquid funds are like they're basically saying that hey they might be able to buy these tokens cheaper like 6 months from now over the counter. So yeah, I mean I do agree with him.
Nice, nice, nice. All right. I mean, like, to be honest, in my view, I think it's going to play out a bit like, you know how Arbitrum in 2022 late and 2023 early? I don't even remember,
Mhm.
but back in the days, like protocols were racing or they were launching at 5 to 10 to 15 FDV at max, just because you weren't able to get any traction. But
Yeah.
obviously, that was very depressing time. Like there was like FTX washing out everything, but also there was a big problem, like because like imagine if you're a team, right? For you to raise money, if let's say if you want to raising 200-300K is not a
Right.
sustainable runway for a year and a half or two in some
Yeah,
sense
it's
because
not.
you need to put a lot of money into liquidity as well, etc. Which is a lot of people don't think about that side, right? But yeah, in the sense that that was what made Arbitrum, in my opinion, and I was hoping that kind of flush out would happen, but it would be. I think it will be only by triggered by some sort of catalyst or something that will trigger. Like right now, it's still very easy to raise money if you're a B plus project. To be honest, in my opinion.
Right, right.
But yeah, it'll be
Got it.
interesting to
Wait,
see how
so
it plays
so
out.
so
Yeah, sorry.
so that's interesting. So you're saying that right now the environment for private markets, it still feels like it's very easy for a B plus team to get higher valuations, whereas back then, although it was a depressing time, that launches at those range like 5 to 15 on like Arbitrum. In your opinion, that was the moment that made the Arbitrum ecosystems like flourish, like a lot of projects. Oh, got it, got it. Yeah, that's an interesting point.
Like it's yeah, I totally think, because like essentially what bear market does to a project, yeah, it's the only, like from money point of view, you should not stay in crypto in 2023. You should just come back when it like you should just go away for a few months and come back when you start to notice things are picking up, right? Whoever is left here is like truly addicted to the space and likely heavy backholders, and yeah, so that's why they had the space and time to grow it, right? Whereas like other ecosystem right now, or even if you're the best team launching right now, it's very very difficult, because like let's put it this way, right? Like if I were a top chain launching the coin now, okay, fine, fair. I don't know how your coin's going to go, but if you're launching your ecosystem DApps, right? If they raise a low valuation, what's going to happen? Yeah, it's everyone's going to buy up because they're like, oh wow, look at that thing. They're currently at 50 or 60 or 80 FDV, whereas like I'm just putting random names, like whereas the top DEX of Mona is only at 10 FDV, and then everyone's just going to buy up the token and not give it enough time to grow in terms of product, community, etc. Right? But whereas Arbitrum, the fair comparison and everything was low in general. So they had like good 6 to 9 months to build the relationship. It's like having to jump into getting married and having to date someone for a long time before getting into bag kind of thing. But yeah, I think I agree with everything. But like normally I'm a long only person as well. But like in the bear market, it's actually relatively profitable to do no leverage or very high buffer to short all these high FDV coins, just because like everyone knows they're gonna drop like hell. But obviously, like you need to be very careful in saying this. But normally, I don't short at all. But yeah,
got it. All right. So I mean, you are a prolific content creator in the space, right? I mean, like you write about like different protocols and you write about different yields. And dude, like I love your like memes and stuff like that. I think a lot of retail people can really learn a lot about you. And just to make sure that we stay on the topic that we have been chatting about, right? Like it seems that this cycle, the antagonistic sentiment between like, oh, VC coins, VCs are dumping and are like dumping on us, and like retail, it's hard. Like, what would you say is different this time around for retail with regards to like the liquid markets in terms of like opportunities? Do you think there are actually fewer opportunities?
to be honest with you, I would like to share a little bit my thoughts on this VC coin cycle. I think a lot of people don't have individual mindset to think about this logically, right? Because if you break things down, right? VC coin is not a problem. People bought into VC coin because supposedly the product is good. Secondly, there's brand endorsement, right? Low float, high FDV is actually good because it's low float. That means it can pump easily. Obviously, you can in argument that you can say because of the sentiment right now, no one is buying so coins. So even though there's essentially no buy power to buy, then they'll pump up. So like everyone will say like, oh, don't buy VC dump coins, don't buy VC dump coins. But if you turn your table around, if it's a low float coin, and if I actually raised a lot of money from VC and I'm actually delivering a product and I need to do some sort of marketing or product push, instead of paying a lot of things to push out your product, why not just create some buy pressure? Which is, I'm not going to comment on certain things, but I'm pretty sure a lot of projects would coordinate with market makers or do some sort of marketing to push up the price a bit. So essentially, from a retail point of view, there's still opportunity. Obviously, you're easily going to get burnt in it because you don't know when is the lowest, when is the high point. Are they just going to give up and just go to an island, have some party or whatever, right? So in my opinion, the strategy that I take personally is downside limited, but potential upside, which is I would like to yield farm and farm stuff in a sense where, let's say if you're bullish on certain chains that have issued a token, which you think is I don't want to name chains, bro, but the tokens are just emitting a lot. But like you think it's a low FDV coin and then high FDV and low flow coin. Why not just farm the incentives, hold the incentives, thinking that it might pump one day? Because like if you think about it, right, most things on the market right now, the incentive is like 20 to 40% APR because they have to match with all the incentives in the market, right? And as the price goes down, they just have to give more incentive to keep this rate. And if you think they're gonna have a mini pump somewhere when the market rebounds to capture some attention, your APR just went from 20% to 60% or 20% to 80% depending on how much the pump is.
Exactly.
And depending on the period that you decide to farm it, your downside is limited. So that's why I think what else are you gonna do, man? Like what? Buy there's not much you can do right now in the market. You can either buy meme coins, you can complain on Twitter. And what else? Like if you got nothing to do, you might as well do some of that. Obviously, people can say, "Oh, there's smart contract risk and all that stuff." Then just go take a rest, bro. Like to be very honest, like if you're not that active and you don't want to be in the trenches, the best thing to do in crypto right now is just to take a rest and just come back to it when the market picks up. But that's the personal strategy that I'm taking and the strategy that I'm advising my community essentially.
Are you not a believer that you will be able to do fundamentals analysis and then like find one coin that will do a 20x and it will be like your moonshot? I mean, we are seeing a lot of like those being shared around, but yeah, what are your thoughts on that?
Okay. I think Warren Buffett is the starter of fundamental as a narrative starter. Like he's the founder of that. I do think I mean if the company is not giving out the interest from its equity, which is a lot of companies on the stocks, it's bullshit value. It's just that there's some law that you can't cheat them out of it. And obviously because everyone is buying it, so liquidity, there's more liquidity, etc. In crypto is even freaking worse because the token value and the equity value is two separate things. Trying to use fundamental as a keystone to buy things, it's 100% not going to work, in my opinion. But
I love this.
The only reason why you should buy fundamental is because that you think people will believe in fundamental and buy the coin, so you buy that because you think they're going to buy fundamental. If that makes sense. That's my true point of view. We are just too far along we're just too early in the sector to start talking about like fundamentals. Like
no, this is absolutely correct. And again, folks, in the future we might have an entire episode just like dedicated for this because it deserves on its own topic. But yeah, man, I mean, like I'd rather buy an equity index screener than any of these like fundamentals token.
I mean, don't get me wrong. Obviously, there's like I'm gonna get so much hate because I like a lot of OG DeFi coins with great fundamentals. I hold them, but mostly out of passion and love. But like as an investment vehicle, like maybe you're better off holding ETH and BTC. To be very honest, just because that the downside and the upside, etc., etc. But yeah, so
no, I just want to expand on that for the listeners a bit. OG DeFi protocols are definitely sort of like making a comeback, and they're much more, I guess, for lack of a better terms, they're much more sustainable. And you know, like the most of the supply are like circulating. But the point that we were trying to make is that no matter what, sort of like if you're trying to value these tokens as the way that Buffett values equities, they will be trading at like hundreds of like times their like earnings, right? So like even though for some of these tokens their fundamentals are stronger than the rest of the markets, it is still primarily narrative driven. I think that's what we were trying to suggest.
And I would like to add another fact that is using fundamental to compete in crypto, it's very difficult. I'm going to use this analogy of let's say Uber. We're still in the days where Uber and Uber Eats and all this stuff is not there yet. Would you order from Uber Eats or let's say from some other food delivery app that is 100% worse, but they're saying that they're taking 80% off of the price that you have to pay for food? Even though Uber Eats is a fundamentally better product, better service, whatever hell, right? But just because there's so much incentives in crypto right now to stand out, you have to outrun fundamentals by so much is you cannot. There's just no way to. I'm a cheap Asian. I'll buy that freaking free meal every day. Like so that's just the game. To be honest, like we're just too early.
Got it. I want to segue our conversation a bit more towards private sale, talking about being like early, right? In 2017 for retail, like ICO was the North Star. Like that's how most of the folks who were from that cycle made their money, right? And then in 2020, 2021, we kind of saw a bit of like IEO and then sort of pool to farmings with like all of the food tokens kind of replacing that. In this cycle, or I would like to get your opinion. Do you think that like all of these like new like IDOs platforms or like LBP stuff like that, as a retail, can you still make it by participating on those private sales?
Okay, I don't think it's the smartest. Like your risk and reward rate is not very high, but I don't think it's because the venue of the platform. It's because of the dynamic of the market. Essentially, so back in the days, ICO were big because like if you did not make it to the cut, you would still buy the token just because how much it will go.
Yeah.
Same with 2000 in the late 2019, 22, whatever. Because even though like right now, IDO rounds are not being filled properly. And if they were filled, you would try to ease it out with like LBP models, those kind of stuff, right? But with very limited buy pressure in general, no one wants to buy secondary anymore. But I don't think it's the terms of mechanics or it's just there's no new money coming in or there's no money that is FOMOing to buy stuff. And I think that's the problem with it, but not the mechanics of it. And if you remember, right, when is the last time you saw a hodl coin post, like to hodl certain coin on Twitter? Because everyone is just so used to. Oh, I'm sorry about my dog. Everyone is
That is cute, man.
everyone is just wanting to sell before another. There's no hopium in holding the coin to the moon, to be very honest.
Okay. So with that in mind, right, I would be, and again, folks, this is not financial advice, but I would be curious to hear your recommendation or your suggestions, right? If you're somebody, if you're like a retail, in their 20s, early 30s, and let's say you can save 3 to 5K a month, right? Maybe like around that range. What would your strategy in crypto be? And I know it's a very specific question, but I think a lot of the listeners and like a lot of the people who are in crypto are leaning younger, and their savings rate is like anywhere between like 1 to 2K a month to like 5 to 10K a month, right? So like I think that's a very, very sort of like useful information for our listeners if we can kind of framework around how should you approach crypto risks with that kind of situation in life.
Okay, if your whole net worth or portfolio is under 100K, you need to do airdrop farming. If you think about it this way, right? Let's say, assuming you're working, I don't know how much you're getting paid, but crypto airdrops can be easily over a few $100s, 1K to 5K. You might have gone to work for 5 or 7 days or one whole day, one whole week in the office, and you will not even get that money, depending on how much you get paid. So it's definitely worth your time. And obviously, when you do these airdrop tasks, typically you will understand the product. You can say, I tried it for 5 minutes. It's shit. I'll never buy the coin. There's so many times when you test a product, you end up liking it. Okay. Second, I'm not saying to be a Cybo airdrop farmer or anything. I'm saying to try everything. Like, I am not a Cybo airdrop hunter. I literally just do things on new chains and new DApps and always somehow got some airdrop. Obviously not the max efficiency, but I always just get them kind of thing. Like, cause like I'm a real user. If I don't get them, the project is not going to make it, to be very honest. I know this sounds like a fucking, this sounds very old, but like essentially is you should have 60% to 80% in Bitcoin, ETH, or maybe Solana, depending which camp are you on. And you need to learn about yield farming just because there's so much additional money you can earn off these capital. Like people kept saying that it won't 10x, it won't 20x. But the problem is it's about surviving the market. If you're going to make a 10x or 5x, 10x, 20x with 20% or 30% of your portfolio, you're going to make it anyways. But if you don't make it, you run out of capital. So you should always buy main as well. And the best thing about right now is because of the new farming and airdrop on all those LRT things, you can actually put essentially you're buying these out token as well. So I think that is definitely a way forward. And personally, even though right now I'm still doing this myself, just because. So my personal strategy is to optimize. Obviously, I have to hodl stuff because there's so much smart contract risk. But like there are big bags that I hold in different main coins in a yield farm to try to optimize it. So if something went, if it doesn't go 2x next cycle, I'm still okay because I will have farmed, let's say 30% realized APR, and then when 1x is still 60%. It's still a lot of money, to be very honest. But in saying that, I like to spend a lot of time on chain. And then around 20%-ish is I'll throw into new sectors research. Whereas like the latest sector, the stuff, which is something I did in 2023, which is pulling a Pendo, because essentially I was early I took Pendo 100x, obviously not my bag, but like my followers made 100x and etc. It's about exploring, and I think I don't like chasing memes because I don't see the future of it, in the sense where, like, imagine you made a lot of people made a lot of money in the NFT time because they know how to grind whitelist. But what did you grow as a person? You did not grow anything other than being chatty or draw something, right? But if you were to grind through how they launched how they launched the NFT, the go-to-market strategies, maybe NFT Fi as well, etc., you have grown as a person and you'll be able to latch on new things. That's why I'm very into Pump.Fun. I'm not into meme coins on it, but I'm very into Pump.Fun, how they do things. And when I see another project in different sector doing very similar right things, boom, and you can identify them and you can make, I don't want to say 100x, but maybe.
You mean writing GM on like Discord is not a real skill that will make you grow like as a person?
I don't want to be ruining anyone's dream right now, but yeah.
Just kidding. But that's, again, dude, that's a very solid advice, I would say. Yeah, because I think a lot of people, I just want to expand on the things that you said about yield farming. A lot of people really underestimate compounding. And again, we both sound like such a boomer at this rate, but like, you can optimize that return with a much larger base of capital. Like, you are not gonna, like, some of us might have made money on whiff, but you would not put 50% of your net worth on whiff even when you caught it early, right? So sure, you might compound 5%, 10x, and if you did that, that's fucking amazing, right? That's like 50% and stuff like that. But for the majority of people, right, unless you're like really in the trenches and like doing this like every waking hours, people really underestimate 30% to 40% like return on your entire portfolio compounded. Like, if you tell that to like a TradFi like PMs, like you will be in the top 1% of like the performers. So that's I think that's a very, very good point. Yeah.
You know, like, just to give some more factual numbers, like, so I spent around 60K or 70K yield farming on ZK Sync before the token, like as a user to test out the train and to test out all the DApps there across a few wallets, just because of smart contract risk. You don't want one wallet to. I literally randomly got like 60K worth of 60K number of tokens of ZK randomly as airdrop. Like, I mean, like, I didn't farm it. I probably could have got more if I farmed it properly. But these are the things that is the best thing about crypto, where you use something, you'll be rewarded, and then that's why you should be active.
I got it. And yeah, a soft plug if you want to know which chains are going to be launching soon. Check out our portfolio companies, but yeah.
Okay. I'm not even go there. I was gonna use this chance to ask you to rank them one by one, so I would use them one by one, but just because we're friends, I'm gonna DM you after.
Okay, got it. All right. I think that's pretty much it, folks, that we have for the first episode. We hope that that's been an enjoyable conversation. Again, our goal with this podcast is just to make it as candid as possible, but still also making sure that it's useful. So it's not just like random rambling of like two guys that you see on the internet. Hope you enjoyed it. And for any feedback, any comments, any suggestions, feel free to reach out to us on like Twitter or comment section or like whatever and like wherever this is going to be posted. Yeah. Any closing words you want to say, bro?
Nah, I'm good, man. So I guess I'll see you guys next week or soon.
All right.
Take care, man.
Cheers. Take care. Bye.